Well, I hope everybody had a great Easter weekend. I was spending time with my relatives, had a great time visiting with them. You had a great Easter weekend. Market was closed for Good Friday last Friday, and we got the PCE inflation data, and we have Powell speaking. Initially, futures has a positive reaction, opened, but then sold off. A strong push higher, sold off as we began to open. We began to see the market sell off once it opened up, began to see a sell-off take place. This is going to be an important week right here. Now, just quickly, the PCE data that we got, the market was closed, so this is the reaction now that we've had to the February inflation data. PCE, favorite gauge of inflation, it came in at 0.3% on a month-over-month, lower than the 0.4 it came in. The core right in line at 0.3. The year-over-year headline number came in right in line at 2.5, but that was still higher than the 2.4. And the core year-over-year came in right in line, again, 2.8. With 2.8, that was lower than the previous reading at 2.9. So you have one lower, one higher. And then we had Powell speaking that day, market reacting to really what Powell said, that policymakers don't need to be in a rush to cut interest rates with economic growth still strong and inflation above its target. CNBC got it right here in the article. That means we don't need to be in a hurry to cut. That Treasury yields jumped today, and they jumped by 3%, and we saw the dollar surge as well. We already had both of them now break out, as I've been talking about. The Dow was down over 300 points. It attempted a little bit of recovery, I believe, at the end of the session there. And we did see the 10-year Treasury note yield jump by 3%, rattled the stock market. S&P were lower. Well, NASDAQ was up for much of the session, and I think with a positive close, it ended up 38 points, while the Dow and the S&P were down. Here it is. And the Dow was down over 300 points at the lows of the session. It ended down to 240.5 points, down 0.60%. S&P was down 0.2%, fared better than the Dow. It was down just 10 points. And it was down much lower levels during the session. NASDAQ composite ended higher by just over 0.1%. The Russell was down, worst performer of the day of the four. It was down 1%, and the VIX was up 4.92%. The VIX was up nearly 5%. The VIX rise, we saw the 10-year Treasury note yield rise, and we saw the dollar rise. These things have a negative correlation, at least currently, with the market. The 10-year yield and the dollar currently have a negative correlation with the market. That changes. Right now, more often than not, it has been a negative correlation. Seeing the 10-year Treasury note yield, again, bounce off the 200 period. A little hard to see the black line right here. I've got a couple of different moving averages here, but you get the 50 here bouncing. And then we've got our 50, and let's see if the 50 is getting near that 200 or above it. Let's take a look. Let me just remove everything so you can see. We've got the 50. The dollar's already got the 50 above the 200, but we got the 50 just below the 200 period here, bouncing off that 200 period here on the 10-year Treasury note yield. Now, again, this is important because this is actually a breakout and back test of the downtrend, which I've been talking about. Here it is. If I zoom out, here it is on the daily chart. And again, you could see we broke this downward trend. We broke out. Not only did we break out of a bull flag, but we broke out the downtrend. We back tested it successfully, bouncing off the 200 period. And now, again, I think we're building momentum to clear this resistance level. You had it over here. We broke out here. Over here, you broke down. It has resistance here and here. I think that you're going to try to break above this level in all likelihood with Powell, possibly this week. The market sold off today on Powell's remarks there on Friday about not being in a rush to raise rates, to cut rates. Again, I'll be watching this level closely, and again, we may consolidate under it for a little while, but again, we'll be looking for a breakout there, and we might try to do it this week with Powell. Maybe we get another negative reaction. He's speaking on Friday. On Wednesday, that will be the 3rd, and here is the Fed's calendar here, and it will be at 12:10 Eastern time during the market session, and it will be a speech about the economic outlook. So again, there'll probably be response to this, and again, do we attempt to claw our way back up, or is that it and we start breaking trend lines, we start breaking down? the levels of support that I've been talking about and start seeing a reversal of conditions. So Powell going to be talking about the economic outlook, and it's going to be during the market session on Wednesday. You're going to have a lot of Fed speakers this week, by the way. I'll start echoing what we heard last week from Fed Governor Waller and Fed Chair Powell, both echoing the same thing, saying the same thing. No rush, cut rates. Waller talking about sticky inflation. That's clear with what we've seen with the economic data ticking back up, missing estimates and so forth with the CPI and the other inflation indexes. So you got Waller out there and Powell saying this. You're going to have a boatload of Fed speakers probably saying the same thing. And again, here it is. Tuesday, a bunch of Fed speakers. Wednesday, again, we've got Powell and other Fed speakers. Bunch of them on Thursday, more on Friday. So you got a boatload of them. And again, it looks like they're speaking at a couple of different places throughout the week. So again, but you got a boatload of them. But we'll be watching if Powell takes the same kind of tone. Again, no need to rush to cut rates. Then we'll see if we get a negative reaction to that. We'll see if we break down this week from our rising wedge pattern on the S&P 500. And then do they all start echoing the same thing, trying to talk the market down? Again, we just finished the quarter, so there's a motivation for bonuses and so forth for money managers. Well, could begin to see selling if we break down from the trend line, the reversal of conditions, begin to see signals begin to play out. Start to see some distribution today. Now, we also have the dollar up, and again, the dollar, the 50 period has already crossed above the 200 in a golden cross, and we also broke out of a bull flag on it, and it continues, the rally continues. So again, we'll be watching, does the S&P start to try to break down or not with the dollar? And you're having now broken the downtrends. We'll be watching to see if they clear overhead resistance now. Dollar starting the month off trying to clear the 20-month moving average. Had that happen the last time, we saw the market peak, top being put in, and a reversal. Now the dollar starts the week off trying to clear overhead resistance from this peak here and this peak over here. We're trying to clear it at this point. We'll see how it looks by the end of the week. But again, the dollar broke the downtrend. Again, it may be that we still back test here. The 10-year yield has already done so, but you've got your weekly MACD now going positive. You've got a breakout of the downtrend, and now you're trying to attempt to clear overhead resistance. These are all the things that were present back up when we peaked the last time around. Start to see strength here with the dollar, with the 10-year, as we are seeing that continue to get a reversal and a breakdown with the market. Now here's the VIX. Initially we had some strength. We had a gap higher on the VIX, but we ended up getting a topping tail at the 50 period moving average and the 20 there. We jumped above them, but then we closed back below that 50 period. The green line right there is the 50 period. So again, I'll be watching the gap now. I told you we could see consolidation here if we go up and try to hit that upper boundary. So what I'll be watching now is which trend line, do we test now? Do we go down and break the rising trend line of the rising wedge pattern on the S&P daily up and hit that upper boundary again and maybe try to fill this gap on the VIX? That's what I'm going to be watching. Do we get a rally with Powell and go up and hit that upper boundary, or do we get a breakdown of the rising trend? Later in the week, we do have the jobs report. But the VIX here gapping higher and then getting a little bit of a topping tail. So again, you're watching the trend lines on the S&P 500. For the S&P to sell off, you got to get back above the 50 and then stay above it and then get back above the 200 period moving average here on the VIX. And again, we drop below the 50. We've been consolidating. Wanted to show you the 10-year yield, the dollar, and the VIX. But this Friday, we'll be getting, not only do we have all these speakers, but we'll be getting the jobs report come Friday before the market opens. It's expected to be at 200,000. Employment rate's expected to tick down to 3.8%. So we'll be watching how that comes in. Again, the Labor Department continues to overestimate on jobs, quietly revises it down later when no one's looking. So they're trying to make things look better than they are, and they actually overestimated the jobs significantly, and I did a video about that not too long ago. I think we're moving towards an important report, and that's going to be the CPI that's going to come in on April 10th. The CPI comes in hot again. If it misses expectations once again, it'll really be problematic for the market, especially since that's the very day we're going to get the FOMC minutes. And this is a week and a half from right now, Wednesday, April 10th. So something to keep on the calendar there. The PPI will get the very next day, which is wholesale inflation. Please support the channel with the link directly below that allows me to be able to provide you this information. The charts, the indicators, please let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. And I thank you for your consideration for that. NVIDIA was up for much of the day, but closed pretty much flat. Got a doji candle indecision, same thing as NASDAQ. Again, it's got a potential bear flag. If it breaks down and we get a lower high and a lower low and we stop making new highs, the high over here is held so far. But if we confirm a lower high and a lower low, start a reversal, then NASDAQ could begin to start seeing signals, get a reversal. But today, a candle indecision for NVIDIA. NASDAQ is following NVIDIA, so it's important to pay attention to this. And there is a bear flag here. Again, we'll be watching to see. High here holds a series of reversal candlesticks in the weekly time frame, not yet been confirmed. So here's what happened. Initially, futures were higher, but then they began to sell off overnight ahead of the market open. The market opened and it got a little pop higher, but then we had selling throughout the day. Tried to rebound after dropping below the 200 on the 5-minute chart here, turned back below it and kind of went sideways. And then tried to get above that 200 at the very end of the session there, the last 10 minutes of trading. If we're going to rebound, you got to hold above that 200 and get above the trending cloud here. So again, I'll be watching the trend lines on the S&P 500 daily. Do we push up and tag the upper boundary, or do we push down? Now, again, with this push lower here, I was watching on that hourly chart, momentum rolling over, which it did happen. That could happen either immediately, Monday, or gravitate towards that trend line and then roll over. We rolled over pretty much immediately. Began to see the sell-off here. Did get the 50 below the 200, but we're hitting the 200 on the 15-minute charts. That is forming a possible bear flag if we break down below the 200 period moving average. And if we do go down further, I'll be watching the trend line for a back test. I'll be watching the gap fill over here, down here right at about 5,200 or so, and watching the trend line on the daily chart. Do we break down, maybe back test with Powell or something like that, or just break down and down with the jobs report later in the week or something if we try to back test, or do we just break down? Or can we recover, hold above the 200 here and recover, go hit that upper boundary and maybe form another reference point of a divergence up here on the 15-minute chart? Maybe see something like this, where we go into get a rally, still try to exceed this level right here and still attempt to hit that upper boundary. We'll be watching which trend line tested but test the upper boundary, new all-time high, or do we break down and start the reversal process? Those two trend lines I've been showing you on the daily chart, which I'll show you in a moment. And that selling pressure caused the S&P momentum to roll over. Again, we came right up here. We moved 3 points above this level on Friday, got a little topping tail, and then began to pull back. And here we are back at the momentum line. We're trying to bounce off of it at the moment here. Still above our 50-period moving average. If we get traction, still may see a divergence develop here and still come up and try to hit this trend line. And this trend line is really important because, again, this is what we've been hitting this trend line over and over again, or coming close to it here and coming close to it here, but we've been hitting this trend line. And the question now is if we can clear this area, which we attempted to do ever so slightly there with our previous rally to test it there on Friday, or I'm sorry, on Thursday. The market was closed on Good Friday. Do we attempt to exceed this level and still go back up to that trend line and then turn, or do we just start coming down and start seeing some real weakness here? I've just drawn a trend line here from these recent lows over here, and then we do have, again, support and resistance line right here that has been acting as support. So if you start taking out the 50, you start taking out the support and resistance line right here, and the trending cloud, breaking the trend line in the daily time frame, then get a reversal of conditions and start seeing a reversal. So I'll be watching what happens. I'll still try to 40,000 level, or is it close but no cigar? And the Dow took a bigger hit today than the S&P 500. So things to be watching. I'll be watching, do we recycle down and break down in the daily time frame, or do we attempt to, again, turn back up and form a divergence? We did have a slight divergence develop on the S&P. We did not get it on the NASDAQ. We did not get it on the Dow here in the most recent price action with the RSI. But the S&P moved about 3 points above this previous peak. It didn't close there, but it moved about 3 points higher and then turned down. So again, going to be watching to see if we turn up here and go up here and better define this. And maybe it's not done. Maybe the Dow completes it, or does the Dow complete confirmation of a lower high on the intraday charts? And I told you we still may come up and try to hit these upper boundaries because this upper boundary on the S&P and on the Dow because of these possible divergences. Well, we moved above it by 3 points, and that was it. But it may be that that's all she wrote. It is possible. And what I'm watching is, does the S&P make new highs and the NASDAQ does not? But if the S&P tries to go higher, again, I'll still be watching the NASDAQ to see if it moves higher or not. Same thing down here on the MACD on the hourly chart. Again, the Dow got a slightly lower high there on Thursday. Again, a topping tail at the very last bar of trading there in the hourly time frame. But again, we were just under this level right here. S&P was just over it. But we came back so far to this trend line right here, trying to get a bounce right here at the moment here, 50-period moving average. So again, I'll be watching. Do we get further selling pressure? All she wrote, or does the Dow still try to move above this area right here? I'll be watching again. Do we recycle back up and try to get a divergence, or do we go down further to an extreme and get a bigger sell-off? And if so, we'll be watching support down here. But again, pay attention to the Dow and the NASDAQ. Do they go up and make new highs? He did, but it only moved 3 points above the previous peak. Thing with the Dow, and I'm looking at the Dow because, again, more weakness in the S&P. So does it start breaking down? And if it does, then that will give us clues that the S&P will. Again, the Dow already broke the trend line. It back tested it. Watching to see, do we move back to this trend line right here and hit the 40,000 level, or do we come down and we break this trend line right here that we've been bouncing off of and start to see a reversal? Got the negative divergences all over the place. Again, do we start rolling over immediately, breaking the 10 and 20 period moving averages, the momentum cloud, and start seeing the divergences complete and roll over, or do we buy a little bit more time and hit that 40,000 level? That's what I'm going to be watching on the Dow. And I'm talking about that because, again, the Dow took a bigger hit today than the S&P 500. So does it start breaking down? You have a possible evening star on the Dow if we start turning down below the 10 period moving average tomorrow. Here it is on the Dow. Again, we got a wide range bar today. We had a wide range bar there on Wednesday, a narrow range bar on Thursday, and that's formed a possible evening star. If we get confirmation, go back and fill this gap down over here, which would mean that we come back down to this low right here and firm the pattern tomorrow. If we see further selling, have a potential little miniature double top right here. We can clear this level, then you've got a shot at reaching 40,000, the upper boundary of the channel. And if so, then S&P can reach its upper boundary. So I'm watching the Dow because it did actually get a candlestick 3-day reversal pattern today, but candlestick patterns are meaningless unless they get confirmation and a follow through. So you got to close below the low of the three-day pattern, which would be here. So I'll be watching the Dow. The Dow starts to break down below the 10. The S&P might try to break its trend line. So I'll be watching to see which way does the S&P break. And we have two trend lines I'm really watching on the S&P. Again, this one from back over here with the lows, the recent lows over here, okay, and breaking that. And then the blue one right here, which again connects this point, and this point right here. So you have about 4 touches or so to that. You've got it here, here, and then these 2 touches right here. To that, and again, that's just below the other trend line, but those are the trend lines I'm watching. The S&P 500 continues to turn off of this trend line, but not breaking down from the rising wedge. We have warning signs, negative divergences in the monthly and the weekly time frame, daily time frame, multiple point negative divergences, get breadth indicators, warning with signals being at extremes and negative divergences, but it has not yet produced a reversal. We could see that play out at any time. Those divergences will play out. They might have just been, the bigs might have just been waiting quarter to end, bonuses and so forth, but I'll be watching these trend lines. Do we break them, or do we go back up to the upper boundary first and then break it? But again, those divergences are going to play out, but because the market takes its time doing it, what it's going to do, they have managed to create complete complacency. S&P's popped a little higher here, whereas NASDAQ, it's really gone sideways for the last 5 weeks. I talked about that in my weekend update. So I think that is showing that we have seen some distribution with overvalued tech stocks. NASDAQ has been going sideways for 5 weeks straight. I showed you the divergence here on the Dow, on the 10 period. You got divergences all over the place. Look at the RSI here and look at the MACD down here. I'll be watching to see, and the stochastic, I'll be watching to see this week if we get a rollover on the stochastic and a rollover with the MACD. And if you do, then again, do we start taking out the 10 and 20 period on the Dow? Do we start losing this trend line on the Dow? Blue trend line here, just below the 20 period moving average. And I'm talking about the Dow because, again, either it's going to go up and hit the trend line and reach 40,000, or it's going to start breaking the moving averages and breaking the trend line there. And again, kind of interesting. Look at this channel right here, and then look at this larger channel right here. So kind of interesting, the channel that has developed here on the Dow. So which way do we break? And if we go up here and test it, could we reach 40,000 before we see a breakdown? And if we do see the Dow reach the trend line, reach 40,000, S&P can hit that upper boundary one more time. The S&P signals remain bullish until we see the trend line break, until we see of conditions and the breaking of the 10 and 20 period moving average. Buyers are still in control. And here are the divergences on the S&P. Again, do we just see this breakdown immediately? Start selling off? Start the reversal process and see the divergences complete? Buy a little bit more time and hit that upper boundary one more time and then see it happen. But again, one of those two scenarios are likely going to be the case. See if we rebound tomorrow or if the selling continues. But these divergences, multiple point divergences here in the daily time frame, telling us a reversal is coming. But because it takes its time playing out, then investors get lulled into a false sense of security, believing that it will not happen. Here, we've got to take out the 10 period, the 20 period. I've got the momentum line here and the momentum cloud. You start taking those levels out, and they've been acting as support. You start taking those levels out, then you get your reversal. Here it is up close. Hang on, my trend line moved on me. This program, sometimes you hit save and the trend lines move on you. Here it is. So again, we've hit this trend line over and over and turned off of it. Here again, possible little miniature double top, just like the Dow. If we start breaking down on the intraday charts, a little miniature double top, you've got these divergences. Do they play out immediately? The MACD starting to roll over again here. So again, seeing the stochastic turn down, we start seeing the 10 period moving average taken out, then you got a shot at the reversal starting. Or again, even if we come down and we hit the trend line and break the 10 and bounce, we still, even if we don't rally immediately, we still have a chance of hitting this upper boundary one more time. So again, we continue to play ping pong surrounding the trend lines. We've hit each one of them multiple times now here with this blue one and the more recent price action lows, and then here the highs. Which way do we break? Do we break down? Do we break up? Right now we're between those two trend lines. If I zoom out, here it is. Here's the multiple point divergence on the RSI and on the MACD. And again, our stochastic right there. So we'll be watching to see, does the stochastic roll over? Do the trend lines begin to break here? The Dow and the S&P 500. Now, NASDAQ has not moved to a new high. S&P did, the Dow did not either, but we still have these divergences. NASDAQ was actually up again 38.5 points today, up right around under, just over 0.2%. And then again, we've got these divergences going on here, but again, we've just kind of gone sideways the last 5 weeks, as I've talked about since late February. We have gone sideways on NASDAQ, and I showed that in the weekly time frame in my weekend update. Again, I'll be watching the NASDAQ. Does it come up and hit this trend line right here, or does it begin to break down, break the downward trend line right here, but then dropped right back below it and closed above it at the end of the session, but we were stalling at that trend line late last week. It moved to a new high, but we inched higher and then we got a reversal. We didn't close there at a new high late last week as well. So if we can try to buy some time on NASDAQ, we can turn back up here, recycle back up, and maybe come back up and come up to the trend line area there, or start losing these levels of support. NASDAQ, again, got a candle of indecision, a doji. If we start breaking down further, then again, I have a trend line from these last couple of lows right here. And if we start breaking down, we'll be watching that trend line there after back testing this one and overthrowing it. Or do, again, go up and hit the upper channel line in the weekly time frame. Never did quite reach it. We don't have to reach it. It's a daily chart. Again, do we just see indicators start to just roll over and start to break down? Again, we're resting at the 10-period moving average. We're resting on the momentum cloud there. Or do we bounce and try to buy a little bit more time? Again, we've got some trend lines from these levels here that we've reached, and this one going further back. We have the channel in the weekly time frame. Candle of indecision can be a continuation of the downtrend here that we've started to pull off the highs, or a reversal bar back up. We continue to trade on lighter volume late last week and on into today surrounding the holiday. So far, there continues to be this divergence between the NASDAQ making a lower high and the S&P making a higher high, which has been present at some turning points here. Not always, but often it is present at turning points if NASDAQ cannot make a new high. The question is, did S&P finish, or is it not done making new highs? Joins it, and maybe the NASDAQ, or do they diverge? And I have a trend line also drawn from the previous high over here, with these highs right here. Didn't quite reach that with their black candlestick, and that really is the upper boundary of our channel. Still may try to reach that level, but if we start seeing sell signals, then maybe that's all she wrote. Here's the upper end of the channel, and again connecting the July peak with those highs right there, and it comes in directly overhead. We didn't quite reach it. The last previous 2 weeks there. Again, we still may attempt to reach that level if NASDAQ does try to move to a new high, but as I continue to point out, we've got these divergences everywhere in the weekly time frame. As we start this week off, they're now starting to roll over. Some of them have rolled over already last week, and others are starting to do it this week. Some are not there yet, but a boatload of negative divergences like we had over here, and the bullish divergences that we had down over here at the bottom of October 2022. So they're just present everywhere. We have a nice looking channel on the NASDAQ. We do have these negative divergences all over the place on the NASDAQ and S&P here, weekly time frame, as we have a potentially nice looking channel. Still may try to go up and hit that upper boundary of the rising wedge first. Triple negative divergences and divergences everywhere. Many more divergences on NASDAQ. Now we're seeing a lot of divergences on the S&P, but some don't have it, like the RSI and the MACD. There is a divergence on the RSI with the NASDAQ, but not with the S&P. It's just reached extremes and continuing to make a higher high from last week's high. We don't have a divergence. There doesn't have to be. There wasn't a divergence at the July top, but there was a divergence at the January 2022 peak. And then we have, again, the MACD making new highs. So just some things to be paying attention to. A lot of indicators have divergences with the NASDAQ or with the S&P, but some don't have it. Divergences everywhere on NASDAQ. Very hard to find an indicator that doesn't have a negative divergence on the NASDAQ 100.